Hello investors and traders, today I'll speak about 3 dividend aristocrats from the US S&P 500 index. So let me remind that dividend aristocrats, it's a company that have increased their dividends in each of the past 25 years. It's really very big and old companies that continue to share their income and revenue with their shareholders. So let's start with the first company. It's Target. So Target now its price about 150. The technical analysis, we can see their size 46. So this in the weekly time frame, this company most probably is now oversold. Let's pay attention to the levels. In my mind, here it's major support level is 100, and here, by the way, 150 it's also a support level. So if this level will withstand, so most probably we will see a nice growth from this level. Regarding the dividend, the current dividend yield is about 3%. The annual payout is only 51%. It means that only half of it, net income, the company pays as a dividend. So there is a huge potential, a nice potential to continue to grow for the dividend payment. 5-year growth rate is above 10%, and the dividend growth is nicely 54 years. Let's have a look on the fundamental parameters of Target. So market cap is above 70 billion bucks. The marginality, we can see it now, the marginality continued to improve because it was 4 years ago 4%, 5, and now the marginality, net margin above 6%. Let's have a look on the projections for the EPS earning. So last year it's will be 5, expecting to be 5.5, but then it will be growing since this year, and few years later it's expecting to grow. And let's have a look on the revenue. Yeah, it's going to be very impressive. It expected for 22 is expected to earn more than 100 bucks, and further for the next year also the revenue expected to be at elevated levels. And by the way, now the valuation, the P ratio 21, PS less than 1. Pay attention that the PS, let's have a look here. Yeah, PS less than 1 is very nice because it was a long time 1.2, 1.1, but now only 66 cents. It means that for $1 of revenue of Target, you can buy it for 66 cents. So in my mind, it's a very cheap stock, dividend king, and why not to receive a nice dividends about 3%. And by the way, to have a nice option that your stock most probably may grow in the future years. The next stock for today, it's Caterpillar. It's a manufacturer producer. So let's have a look on the chart. So I already had a video. I done a video about this company. So here it was a channel. Most probably we are getting out from the channel, and the target is about for the length of this channel. So most probably it will continue to grow. So by the way, what I'm thinking also about Caterpillar, its marginality last year's is quite stable. 11%, 12%, dividend yield is about 2%. It's a very big company, more than 100 billion, and the dividend payout is very low, only 33%. The projections on the annual basis, yeah, the last year expected to show, I think it's the highest EPS in the history, and the revenue also expected to be about 60 billion per year. Yeah, it's much higher than the last years. Regarding the dividends, so as I told previously, dividend yield 2%. The payout is very low. It's a good sign. The 5-year growth rate is also 8%, and the consecutive dividend growth is 29 years, so it's very impressive, and that is why Caterpillar continue to be a dividend king. And let's have a look on the last company for today. It's Coca-Cola. So Coca-Cola, of course, it's beverage, consumer non-durables. I think most of you know Coca-Cola. So the chart we have here an increasing channel. In my mind, the target can be here. It's about 68 bucks. So in this case, there is still potential to grow about 10%. Their size, I can't say that oversold or overbought, but I think it's may continue to show nice growth. Let's have a look on the dividends. The current dividend yield about 3%. The payout is 70%. The 5-year growth is more than 3%, and it's the highest dividend growth for today is 60 years. Yeah, I can't believe it's for 60 years Coca-Cola continue to pay and even to show grow in dividend payment. So quarterly you can receive a dividend from Coca-Cola Company. Let's have a look on its fundamental parameters. So market cap is above 200 billion. It's the biggest company in our video today. The marginality is very stable. It's even increasing. The net margin is 25%, 23%. Yeah, it's quite high. Of course, it's not Google, not Apple, but still 25% net marginality is very high. The projections, let's have a look on the projections. EPS, earning per share, will continue to be higher than the previous year, about 2.5, 2.6 bucks, and the revenue also very stable, 42, 46, 48 billion per year. So today it was a video about 3 dividend aristocrats, Target, Caterpillar and Coca-Cola. So all of 3 stock of scholars, very nice investment if you like dividend, if you like passive income. I personally hold Target in my portfolio, but I think all of them it's not a bad idea to maybe not to buy, but at least add them to the watch list now, because now it's in the first first half of the year. I'm expecting the indexes and the stock market to show a little downturn. So this why now I'm heavily load the boat with the dividend stocks, with the dividend kings. So if you like this video, press the like button. Don't forget to subscribe to my channel, and see you on the next time.